Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Monday, the 12th day of October 2015, and this is the daily report for gold and silver. We do have the precious metals complex higher today. That is with the exception of palladium. We'll look at that in a second. We currently have gold trading up approximately $8 on the day at $1163.50. Now, we have seen it trade to a high today of $11.69 and a low of $11.54.93. And as I said, currently up roughly $8 on the day at $11.63.59. Silver also trading higher, but in essence unchanged on the day. As you can see, in terms of the net change, you're looking at about a 1 cent change at $15.83, low $15.80. High 1608. Platinum also trading higher. It's actually leading the way in terms of percentage gains, trading up about $14 on the day at $995.90. The high 1003. And lastly, palladium is getting hit pretty hard today, off about $14 at $693. Right off of the lows, $692 on the lows and $717 on the high. This market has seen a lot of volatility without any question of a doubt. So traders, as we look at the precious metals markets trading today, absolutely no doubt we've seen a nice move to the upside, with gold actually trading over its former or previous top over the last few days. That top roughly at 1151. You can see that here, and absolutely just barreling straight through there. However, our next top or next level that we really need to take out, which is at roughly the 1170 area, you can see that top right in here. That's the top that this market is currently flirting with. Now, when we look at this particular chart, and this chart is a half a day, but it's Japanese average. So it's not really looking at true opens. It's looking at the midpoint of the prior candle. So when you're looking at a half a day candle, it will break obviously the day up into two candles. So we're looking at the midpoint of the first session, comparing it to the midpoint of this current session, and that would be these last two candles here. What we look for on this type of a candle chart is the fact that we have no lower tails, and all that means is that it at no point traded at or below the midpoint of the prior candle, and the upper tails are really not as important because we're looking at the highs that came in. So it still shows that the uptrend that we have been witnessing, at least on this chart, is fairly intact. However, there is some caution that we need to put into the wind when we look at some of our other studies. And so traders, the chart that I've just pulled up is a standard candlestick chart. Now this chart, of course, is a half a day chart also, but it's in the standard candlestick format. When we look at this, we've plotted out obviously all of our different levels of support and resistance that we think we'll either go to or already are at. When we do that, we can clearly see how this particular top up at around 1170 is absolutely where our current resistance is at. And that doesn't mean that we won't take it out, but it does mean we could see a little bit of backfill. And what I mean by that is as follows. You can see that this market, here's the beginning of this rally, goes roughly to about 1104, trades to a top of about 1141, but from there you get this slight correction, really trading to 1128. That's the low that we had, which is a 50% retracement of this move here, the move from 1153 down to 1104. So we get this retracement here, just a little bit of backfill, and then from there we come up and we make another high. This time the high roughly at 1153, and you can see that that 1153 really corresponds roughly but pretty closely to this particular high here. We get a little bit of backfill. Now this time the backfill takes us to 1134, and 1134 also falls within one of our fib retracement numbers. So when we look at it in that way, it's pretty logical. That being said, we now have the market coming up and taking out this former high right here and going to test the last high, which was here at about 1170. So my sense is if we were to get this market to backfill, we could get it to backfill quite easily 253 and then come in and look to finally take this one level out. Now traders, as I said on Friday's show, and in fact we've been talking about for over the last month, it is absolutely critical for any bullish model to hold any kind of weight that we take this stop out at 1170. So far, we have touched upon it, and that's the first thing we need to do before we take it out. The fact that we've got some backfill coming into the market, that doesn't surprise me all that much. But as I said, it is essential that we absolutely take this level out at some point this week. So traders, lastly, before I put this chart away, I do want to go over stops, current stop, and I am recommending that at this point we raise our stops. Of course, for those in this trade, we got in roughly at 1144. Market's trading 1163, so we have about $20 in our favor. We currently have a stop at 21, but I also made a recommendation for those that wanted to have a tighter stop to have that stop roughly at around 1133. Corresponds to this 1134. I believe that at this point, we have seen this market come up. We could have this market correct a little bit, so we don't want to really get knocked out if it just trades to about, let's say, 53 and then moves back up. However, my suggestion is that all traders should move their stops below 1141. It's a 23% retracement of the shorter move right in here. My sense is that if we do get backfill, that backfill should really still find support roughly at the 1150 area, and this stop would be safe. However, if this market genuinely wants to reverse, it's got to take away this particular top that it finally took out, which is why this is the area that we're looking at to put it just under. So I would feel safe, traders, go ahead, move your stop up to 1141 and put it just below that point. So traders, let's take a look at palladium. Now, palladium is a much more volatile metal in terms of price change. In terms of liquidity, there's a lot less liquidity, so you get spikes both to the upside and downside in this market. This market is absolutely under pressure, trading under 700. Our primary trade, of course, is our long gold. We do have a secondary trade in here, which is palladium. We got in roughly at 706. Market's trading 695, so it's roughly $10 plus against us. Now, our current stop in palladium sits at around 681, just below that. My suggestion on palladium, it's got increased volatility. Market's about $10 to where our entry price was. We could see some weakness come in here, but my suggestion is we maintain our stop currently at 681. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.